Well, good morning or good afternoon to everyone, depending on what part of the country you are calling in from. I'd like to welcome you to the webinar on the first-time homebuyer solutions with Freddie Mac HomeOne Mortgage, brought to you by Finance of America Wholesale. So while you're getting logged in, I'm going to go through a couple housekeeping issues. First of all, you should be able to hear, and we do have microphones muted for our attendees, but we want to make sure that you can hear us okay. So a couple different options there. You can listen on your computer, and you can do that through your audio settings, or you can call in. There's a phone number there in your invitation, and you can call in there as well. So there's instructions there on how to do that. And then we do have several attending the webinar today. It's a very popular webinar, so we're excited to have you on. And we want to make sure you can ask questions. However, I'm going to tell you we have a Q&A that's coming up at the end of the webinar, so we'll probably address a fair amount of questions there. And then if you have any detailed questions regarding underwriting, you can contact your Finance of America account executive for those as well. But I do want to make sure that you have access to the information. I have posted up the link to my presentation today that is on your chat box. And let's talk about the chat box and questions right now. You have a couple of different options for asking questions, and one is in the Q&A box, the other is in the chat box, and both work. I see both of those. And so let's just go ahead and make sure that you all can hear me okay, and you know how to ask questions. So if you can type in either one of those, the Q&A and the chat box, and let me know you can hear me, and let me know if you have done a HomeOne mortgage yet, or also let me know how your weather is. The weather this time of the year I absolutely love because it's my favorite time of the year in the fall. Things are still warm during the day, a little cool at night, and lots of activities going on. So it looks like you all can hear me. Awesome. Your weather's good. Foggy. Great. We'll see. It's always foggy where you live. So, and it's rainy here in Portland, Oregon. Not a surprise. Kind of starting early, I guess, but I'm actually off to Montana tomorrow, and it looks like it'll be nice there. So you can hear me, which is great. Diana, it's always gorgeous in Denver. I'll be in Denver in a couple weeks, so look forward to the weather there. Grew up in Denver and absolutely love, love, love the weather there. So you can click on the link that is in the chat box, and I'm going to actually put it up there again real quick for you so you can access that. And then we'll also send an email link that'll come out tomorrow that'll have the link to the chat box, and then, or to the chat box, I have a link to the webinar presentation, and then I also put all the material, including this recording, that is available in FAMU. So you can always access everything. Make sure and get the handout though, because there are a couple links in there that I'm going to cover today that would be good for you to have. And so it's available on the PDF of this presentation. That way you can just bookmark that where you're at. We have another webinar coming up in a couple weeks that I'm really excited about. It is what we're calling a VA Strong webinar, and it's building home ownership for those who serve. And Terry Buckman, who is the Senior Vice President of Wholesale for Finance of America, is going to be joining me for this webinar and talking to veterans, because she herself is a veteran. So you can get registered for that webinar at famuevents.com, and all of our webinars are listed there. So let's get started. My name is Ginger Bell. I'm an education specialist with GoTo Training. I do all the webinars for Finance of America and also oversee their FAMU education there, and am blessed to be able to work with such a great partner, and they truly are a partner in the industry to be helping to bring education to independent mortgage originators. I'm excited. Excuse me, I do have my book out. It's my third book. This is my first one with Jack Canfield. It's called Success Breakthroughs, and it will be available within hopefully the next week. They told me it's shipped. It is on Amazon, but if you'd like to order a copy that is autographed, I'm going to send a follow-up link probably next week, and you can look into that. So one of the things that I do talk about in my book with Jack is edu-marketing, what I call edu-marketing, and that's using your expertise to build education and market yourself as the expert. And this program, the Freddie Mac HomeOne program, is a great program to do that. And that's why we're providing a lot of the resources to be able to take this out to your realtor partners, do blogging about it. If you're doing things on social media, nice little notes about that. It's really an opportunity for you to stand out and to connect with homeowners that are first-time home buyers. First-time home buyers comprise nearly half of housing purchases. And according to Freddie Mac, 44% of borrowers are first-time home buyers. So huge opportunity here to be able to provide them with this great program. However, due to income restrictions, they are ineligible to use the Home Possible, which is available also through Freddie Mac. So the Home Possible program was very well received in the market since it launched 3 years ago. But according to Freddie Mac, lenders found that the Home Possible guidelines were too specific. And under Home Possible, borrowers would have to meet income thresholds as well as thresholds based on certain geographies. And as we know, things change a lot during a loan transaction, such as discovering additional income sources or a spouse that wasn't going to be on the mortgage, changing their mind that would make a borrower ineligible for Home Possible. And that's why Freddie Mac introduced their HomeOne Mortgage. So it provides a solution for high LTV needs. So it's 95.01 to 97% financing. And there are no income restrictions. There's also no geographic restriction. So currently, Home Possible offers the same as far as financing, but there are income restrictions that are based on various geographic areas. And so that's why they introduced the HomeOne option. So let's look at the guidelines. First of all, primary residence only. That means all borrowers must reside in the property. It is available for purchase and rate and term refinance. As we said, it's a 95.01 to 97% LTV and CLTV. 105% CLTV with an affordable second. This is available only on one-unit properties. It does include condos and PUDs. However, no manufactured homes are eligible. Standard mortgage insurance applies, so 35% financed MI is ineligible on loans that are greater than 95% LTV. Now, a big one here, it's fixed rate only. So no ARMs on this particular loan. You have to have an LPA accept. There's no manual underwrites on the HomeOne. And super conforming loan amounts are ineligible. You need a minimum credit score of 620. And this is not part of an affordable housing offering. It simply complements the Home Possible guidelines. So let's look at purchase first. On the purchase, only one borrower must be the first-time home buyer, but all borrowers must reside in the property. Home ownership education is required only if all borrowers are first-time home buyers. So I'm going to repeat that. The home ownership education is required only if all borrowers are first-time home buyers. There is free home ownership education class. It's available through Freddie Mac, their Credit Smart, and the link is on there. So if you have a borrower and all the borrowers are first-time home buyers, only one needs to attend it, but this is where they can go to get it, and it's free. Let's talk about our rate and term. And again, this is rate and term, so no cash out. The property must be owned by Freddie Mac. So that's the first thing, unless subordinate financing is an affordable second, and you must confirm that the property is owned by Freddie Mac at this particular site. So remember I said grab this presentation because I included the links for these so you can bookmark them and have easy access to them. So you can look up and see if the property is owned by Freddie Mac at this particular site. And I am seeing someone raising their hand, so I'm not able to unmute you. So if you have a question, include it in the Q&A or in the chat box. If you're just checking out the features of Zoom, let me know. Oh, Sandra's asking where the PDF. It's exactly right here where you're typing, Sandra, and I'll put it up there again. So it's that little link right there that says the HTTPS, and then we'll send out an email. And I'll send out an email tomorrow, and then I will also include it in the FAMU site, so you can go in there as well. So let's move on and talk about some of the options as far as the LTV expansion. So this is similar to Fannie Mae's high LTV option, if you're familiar with that. It's available on both your conforming choice and your conventional LPA plus. You just use the existing program codes. The standard LTV and CLTV pricing adjustments apply. And I'm not going to go through all of these. You can talk to your FAM account executive to help price this out. But this is very similar to your Fannie Mae's high LTV option. Let's compare both of your options with the Freddie Mac and Fannie Mae. So if you're looking at the Freddie Mac HomeOne compared to the Home Possible, income or geographic locations restrictions on the HomeOne, there's none. On the Home Possible, there is. Same with your Fannie Mae. So Fannie Mae, they're 95.01 to 97%. There's no income restrictions or geographic restrictions, but on the Home Ready there is. Pricing, there's adjustments there. Mortgage insurance, 35% on the HomeOne, 25% on the Home Possible. The Fannie Mae, 35% on their 95.01 to 97 and 25% on their Home Ready. On the high balance and super conforming, not available under the Freddie Mac, either the HomeOne or the Home Possible or the Fannie Mae high LTV, but the Home Ready, it is available for the high balance and the super conforming. First-time home buyer, available on the HomeOne, not on the Home Possible, and then on the high LTV under Fannie Mae, it is available, but not on the Home Ready. So when you're meeting someone, you know, these are the kind of things that are good to hang on to, just to kind of remind yourself, maybe print it off, put it on your desk as an easy reminder, especially for your first-time home buyers, on what the options are available. So the HomeOne program requires that at least one borrower be a first-time home buyer. So what does that mean? It means that, and this is a quote from the Freddie Mac site, any borrower who has not had any ownership interest in a residential property in the last 3 years. So other borrowers on the loan can own other property, but remember, they have to reside in this property. Displaced homemakers or single parents can be considered first-time home buyers. And I'm going to go into that on one of our FAQs, what that means. If they are first-time home buyer if they did not own a second home or investment property with their spouse. But this is important to remember. If you have a borrower who inherited a residential property, they are not considered a first-time home buyer. So if you have someone that recently inherited, you know, mom's house or grandma's house, and they want to turn around and purchase it, or they want to buy another house, they're not considered a first-time home buyer. So 3 years is the biggie if they're displaced or a single parent or going through a divorce or something like that. Then there are some options for them to be considered as a first-time home buyer. So let's take a look at that and see what that means. And we have a question: owned by Freddie Mac or currently financed by Freddie Mac? So you can look that up. The question is, does it have to be owned by Freddie Mac or currently serviced by Freddie Mac? And if you look it up, you'll be able to tell whether or not it is in there. So there are some parameters that they have in place as to what that is, and The seller's guidelines go through all of that as far as if it is owned by them or just serviced by them, but the guidelines say it needs to be owned by them. So when you look at going through, it must be owned or securitized by Freddie Mac. So it could be just a matter of financed, but it needs to be, the term is securitized. So if it's owned or securitized by Freddie Mac, then it's eligible, and that link will tell you how to find out where that is. And so, and then I have a question from Terry. Will the PowerPoint be available? PowerPoint's available. It's in the little chat box. I'm going to send an email to you as well. And then I'm also going to put it in FAMU. So let's move on to our FAQs. And keep typing things in there, guys. If you have any questions, I'll just stop as we go along. So I actually compiled a list of frequently asked questions to help you understand more about this program. And I'm just going to key each of these up, and then we'll go through, and hopefully that will answer some of the questions that you may be having. So the first question is, do all HomeOne borrowers need to take a home ownership education course? And the answer is no. The homeownership education is only required when all borrowers are first-time homebuyers. If all borrowers are first-time homebuyers, at least one borrower must complete a homeownership education program. And there's free financial education that's available at CreditSmart. And again, this link is available right here in the PowerPoint presentation, and that's considered an acceptable form of home ownership education. The next question, is HomeOne only eligible for fixed rate conforming mortgages? And the answer is yes. Must be fixed rate conforming mortgage secured by one unit properties where all borrowers occupy their property as their primary residence. So the following characteristics are not eligible: adjustable rate mortgages, super conforming loans, cash out loans, second homes, and investment property. So those are not eligible. So it must be fixed rate, one unit, all borrowers must occupy the residence. Next question, is the mortgage insurance for HomeOne cancelable with sufficient equity? So can they cancel it? And the answer is yes. So unlike government insured loans, the mortgage insurance for HomeOne may be canceled once the property reaches 20%. And again, this is another opportunity for you to talk to your borrowers when you're going through different loan programs and looking at that comparison, because that could have a big impact on them, you know, when it ends up, the equity reaches 20%. So maybe if they're buying a home where there's a fair amount of equity in it, you know, down the road, that's going to go up in value quite a bit. That would definitely be something to look at. Do all borrowers have to be first-time home buyers for a HomeOne mortgage? So, no is the answer for purchase transactions. At least one borrower must be a first-time home buyer, so just one. And this is according to their Freddie Mac guides. They define a first-time home buyer as an individual who has met all of the following requirements. First, they're purchasing the mortgaged premises. Second, they will reside in the mortgaged premises as a primary residence. Third, they had no ownership interest, either sole or joint, in a residential property during the 3-year period preceding the date of the purchase of the mortgaged property. And then, in addition, a displaced homemaker or a single parent may be considered first-time homebuyer if the individual had no ownership interest in a residential property during the preceding 3-year period other than an ownership interest in the marital residence with a spouse. So if a displaced homemaker or a single parent solely owned the marital residence or solely or jointly owned a second home or investment property, then the individual may not be considered first-time homebuyer. The next question, I have multiple borrowers on a loan. One of the borrower meets the definition of a first-time home buyer, but the other borrowers currently own another property. And the question is this allowed? And the answer is yes, this is acceptable. HomeOne requires only one of the borrowers to meet the definition of a first-time homebuyer, but remember, they all must reside in the home. So that's the caveat there, that they all have to reside in the home. Next question, if a borrower inherited a residential property and now wants to purchase a home using HomeOne, does having an inherited property disqualify the borrower from meeting the first-time home buyer requirement? And the answer is borrowers who inherited a residential property are not eligible for a HomeOne mortgage. So one of the requirements for meeting the definition of a first-time homebuyer is no ownership interest, either sole or joint, in a residential property in the 3-year period prior to the purchase of the subject property. However, if another borrower on the mortgage meets the Freddie Mac definition of first-time homebuyer, the mortgage may still qualify as a HomeOne mortgage. So you're probably not going to fall into this very often, but having knowledge of this can definitely help to put some deals together or save some deals that you may have. So something for you to remember, just another arrow to put into your quiver there. So next question, can a borrower refinance a mortgage using HomeOne? And the answer is yes, a HomeOne mortgage may be originated only as a no cash out refinance if the LTV or the home equity combined LTV ratio is greater than 95%. The mortgage being refinanced must be owned unless it has secondary financing that is an affordable second. So if they have a second, it has to be an affordable second if it's not owned or securitized by Freddie Mac. If the LTV and the home equity LTV is less than or equal to 95%, then the total LTV ratio exceeds 95%, and the secondary financing is an affordable second, the loan being refinanced does not have to be owned by Freddie Mac. So the maximum total LTV ratio of a HomeOne mortgage is 105% of the secondary, if the secondary financing is an affordable second. So a lot to remember. It's one of those things that if somebody has a home, they want to do a refinance, first of all, no cash out. Second of all, find out if it's owned by Freddie Mac. If it's not owned by Freddie Mac, do they have an affordable second? So those are the 3 things that you want to look at first, and then you can get into the whole percentage from there. And we're getting a question, where can we get an affordable second? And that I do not know. So if anyone knows where you can get an affordable second or where they would get that, they would have had it for a while. Post it in there. Let me know where those are. And I'm sure there's not a lot of those because we haven't had a lot of seconds around for a while, but if you've run into that, by all means, let us know. Okay, moving on. Next question. For a HomeOne no cash out refinance, how will I know if the mortgage being refinanced is owned by Freddie Mac? So the borrower can look it up, or you can look it up if you authorize, they authorize you to look it up, and it's under the Freddie Mac Loan Lookup tool. And again, I put the link on this PowerPoint, so all you have to do is just click on where this is, and I'll put the links in the follow-up email for you as well, so that way it's easy. My advice to you is just either put it onto a sheet, all of these links, and just mark it HomeOne Mortgage so you have that, or if you want to bookmark them on your computer so you have them, that's another thing too. And another thing, you know what guys, this is great for you to use for marketing. So you can just put information out there, great option with the HomeOne Mortgage, no cash out refinance, find out if you're eligible and put the link up. I can help you with that. So super simple to use. Okay, next question. Which properties are eligible for HomeOne? 1-unit properties only. including condos, and then units that are in your planned unit developments, your PUDs, are all eligible for HomeOne. So only 1 units, no 2 to 4 unit properties. HomeOne does not permit manufactured homes, so pretty simple there. What rental income may be used to qualify the loan for a HomeOne mortgage? And the answer is that HomeOne provides the only acceptable rental income from a borrower's 1-unit primary residence is for a borrower with a disability if the rental income is from a live-in aid. So that's it. That's the only time. And you're going to have to prove that. So Auntie can't just suddenly become a live-in aid. So you want to make sure and have some proof for that as well. Since 2 to 4 units are ineligible for HomeOne, rental income, obviously, from the 2 to 4 units are not applicable. So all of the information that I got from the FAQs are available on the Freddie Mac site, and again, I provided the link there as well. And Lisa, I am not seeing anyone posting any ideas as far as where they can get an affordable second, so you're probably not going to run into the affordable second very often. I'm certainly not aware of anything right now. If you all are aware of anything, by all means let us know. So if you have any questions, post them up there, but otherwise I want to go through and I want to talk about the HomeOne features. So this is a review and a reminder. Purchase and no cash out refinances under HomeOne. There are no borrower geographic or income limits on this particular loan program, which is great. Homebuyer education is required for purchase transactions when all borrowers are first-time homebuyers. 1-unit properties only with fixed-rate financing only. Standard 35% mortgage insurance coverage is required for LTVs that are greater than 95% and allows for both affordable seconds and other secondary financing per the single family seller guide. You can talk to your Finance of America account executive in order to do that. And accommodates various property types. So 1 units, condos, PUDs are eligible. So Richard, thank you for posting that. And Richard is sharing that you can in California get a Cal HFA second. So if you're in California, you can look at that. Debt to income ratios. So a couple questions you guys are firing away. So first of all, debt to income ratios are acceptable. What debt to income ratios are acceptable? So this is an automated approval, so you need to run that in order to find out what your DTIs are acceptable. So we don't have a standard table for that, but you can contact your FAM account executive to help as far as running. And next question. So Archer asking, you're having a hard time figuring the difference between the regular and the HomeOne. So I would recommend going through the guidelines and tables with your account executive if you're having a hard time knowing the difference between the two. This one provides for your higher LTVs. So, if you're looking at going up to, 3% down for purchase and what's available under the purchase, there are eligibilities as far as higher LTVs, and you can combine them with a second as well. So, when you're looking at the options as far as your purchases, then it gives you an opportunity to have a higher LTV, and those are one of the benefits for doing that. So if you're having questions on the difference between the two of them, then I would talk to your Finance of America account executive. And you know what? Monica's asking, what's the maximum loan amount? I don't have that particular amount in front of me. If we have a FAM account executive that happens to know that, It's going to depend on the area that you're in, so your loan limits will apply. So I would suggest contacting a Finance of America account executive to find out what the maximum loan limits are in your area. Yeah, and you're asking specifics to a particular county, and unfortunately I don't have that right in front of me, but you can contact your Finance of America account executive, and really that's the key, guys, is you're getting into specifics, sorry, and that's what's great about having the Finance of America account executives is they can share those informations and help you to put these together. And that's really one of the benefits is call your FAM account executives, go particulars, because it sounds like maybe if you have a loan scenario right now that you can go through, then it's a great opportunity for you to go through that with them. And what the HomeOne program provides is it brings more first-time home buyers to the table by allowing a 3% minimum down payment, more flexibility for your financing, educational requirements that if they are all first-time home buyers, it helps to support and provide an informed and responsible person going into home ownership. It's eligible for single-family homes, including townhouses and condos. And there's a Freddie Mac fact sheet there that's available if you want to access it as well. And again, I have a link to the PowerPoint slide deck that is in the chat box. I'm also going to be sending out a follow-up to those, to your emails as well. You'll get that tomorrow, probably in the afternoon, and then I'll be posting everything in the FAMU site. And remember, we're here to help. You know, one of the things that the reasons we do these webinars is to provide you with the base of the education, to let you know, hey, this program is available, to give you the highlights, and then make you aware of the options that are out there so you can go out and provide that baseline education for your realtors as well. But for any questions that you have, you want to make sure, contact your Finance of America account executive. FAM has some of the most wonderful, knowledgeable, educated account executives in the industry, and they are committed to you and they're to help you. So contact them, reach out to them. If you're new to FAM or you haven't gotten started with FAM, this is a great time to do that. And to be able to go to famwholesale.com, you can find out more information. You can also register for the FAMU site, and you want to contact your FAMU account executive to get a login for that. They have a code they can give you, and then we want to provide you with resources. So I'll be sending out an email to everyone tomorrow that's going to have a copy to the recording. I'll send a copy to the PowerPoint, and I'll pull all the links that we have and post those there as well. And I want to remind everyone that we have a webinar coming up on September 26th, and that is on VA, so building homeownership for those who serve. So some of the things we're going to talk about in that webinar is, how do you talk to veterans? What's the terminology? You know, what are the things you need to think about? And I was doing training last month in Denver for Model Mortgage, and one of the questions that came up was, when do you find out if as a veteran is eligible? And you want to do that straight away. But how do you do that? And what are the questions you have? And what's the terminology? And what are the things you need to think about for housing? There's lots of great benefits with VA. So I'm very excited to be having Terry join me on this webinar on September 26th, 11 a.m. Pacific time. You can register for all of our webinars at famuevents.com. So I want to thank everyone for attending the webinar today and wish you a great day, a wonderful week ahead. And if you have additional questions, please contact your Finance of America account executive, and I will see you on September 26th. So thank you so much, and goodbye, everyone.